I would like to welcome everybody to our latest SEM University. This month's topic is making an impact with your investments. Now at SEM, we are all about continuous improvement. And part of that is just listening to our advisors and clients all across the country. And over the past several years, we've heard a lot of requests from people looking for investments that go beyond just maximizing returns. So of course, if you followed SEM along very much, you would know that we're not just going to offer something that we don't truly believe in or something where the numbers just don't make sense. From a standpoint of impact investing, this was really something that we couldn't ignore. Now, I don't have time today to go into my personal testimony, but one of the things that Brandy and I have prayed about pretty much every day over the past 20 years with SEM is we just want to find a way to make a difference with our company and people's lives. And that's just our mission. I think anybody who knows us and who knows SEM knows our mission is about making an impact for people. And it's funny, God does answer prayers, and I'd love to chat with each and every one of you. And since we've launched Cornerstone, I've thoroughly loved hearing everybody's story about why they want to make a difference in people's lives and some of the unique ways that they're doing that. So definitely reach out to me and we can chat about that. Now, of course, with that SEM, we've studied demographic data for the last few decades. I've always considered myself an amateur demographer, and I've talked a lot about the social cycle over the years. Now, Brandy and I are Gen Xers, what they would call the forgotten generation. Prior to that, people said the lost generation. And when we started our family, we were very young. And so all of our 6 kids, 4 of them were millennials. And then we have 2 from what we call Gen Z, or the Zoomer generation. 2 of our older kids are already married to other millennials. So we know a lot about this generation. And I think one thing to us that's been very prevalent in these generations is they want to do more than just get rich. They are looking to make an impact. And so we're likely to see over the next 10 years, as Gen Xers and millennials start to inherit more and more money and they start to get into those maximum earning years, that we're going to see a big rush to have some sort of impact investments. And we know there's going to be a lot of junk inside of there. So SEM wanted to get out ahead of this curve to have something that is truly sound technically and is still doing the right thing for our clients. Now, over the years, I can't count how many times I ignored the requests for portfolios that did some sort of impact investing. And without ever doing my own research, I believe what Wall Street had always told us, which was, when you're doing responsible investing, you're going to sacrifice returns. Now, a few years back, I was visiting one of our advisors and we were talking about our AmeriGuard portfolios. And he said to me, look, Jeff, I love this concept, but have you ever considered doing this with faith-based investing? And my first response was the same response I'd had over 20 years was, you know what, I don't want to sacrifice returns. I'd rather just get the maximum returns possible and then let our clients do what they want with that money. And he said, well, look, even if you give up just a little bit, think of the impact you can make with your platform and with the amount of money that you guys are investing if you did some sort of impact investing. So I kept that in mind. The next week I was back in our Arizona office and I started talking to it with Cody, and we started taking a look at Morningstar. And the first thing that stood out to us was there was a lot of biblically responsible investments with a track record going back into the 90s and early 2000s. And I thought, okay, well, I had no idea there was this many biblically responsible investments out there to begin with, and that they've been around this long. So what we did is we said, well, let's just take a passive portfolio trying to match the Vanguard Total Stock Market Index. So we looked at the Vanguard, large cap, mid cap, small cap allocations, and we said, let's just make a passive index of BRI, biblically responsible investments, and see what happened. And the results were a little bit surprising. And here's the 20-year returns. And you can see over the years, just a passively managed, biblically responsible equity portfolio slightly outperforms the Vanguard Total Stock Market Index. And I said, okay, well, maybe that's just a 20-year phenomenon. We looked at the 10-year period. BRI still had a slight edge. And then even going into the last 5 years, you see, when we look at that, BRI portfolios still have a slight edge. And when you take a step back and look at the annualized returns, you can see pretty much the BRI portfolio passively managed slightly beats, or most of the time meets, the Vanguard secular approach. Now, just to be fair, and not every year is the same. There's going to be years where the BRI portfolio does better, and there's years where a secular approach does better. But to us, this was step one, was okay, if you can create a portfolio that, let's just call it the same as a secularly managed approach, now it just squashes everything Wall Street has told us, which is you sacrifice returns if you do an impact approach. At least in the biblically responsible arena, that's not the case. The other thing we really liked about this is you get more diversification, surprisingly, with the BRI Equity Core portfolio that we've created. And the reason being is they're not married to those mega cap stocks that we've talked a lot about the last few years, the FANG-M, or whatever you want to use as far as acronyms go, the Facebook, Amazon, Apple, Microsoft, those big mega cap companies that skew the total market portfolio to just a handful of companies, with something like 25% of that portfolio is represented by 7 companies right now. So that you get a little bit more diversification, as you can see with the BRI equity approach there. So now let's talk about impact investing, or social responsible investing, and what it really is. And most of the time when you hear about socially responsible investing, or sometimes they just call it ESG, you tend to think of a focus on environmental issues. That's, the first letter in that ESG acronym is environmental. Now, what's surprising, and I didn't understand until I started looking into it, is biblically responsible investments are actually included in this socially responsible, or ESG category. And with us, many of our advisors are Christians, or they have a large number of clients who are Christians, especially here being in the South, over in Virginia, and in this neck of the woods, you have a lot of Christians. But most importantly, if you look at the people inside SEM, being a Christian-based company, it just made sense for us to focus on just the biblically responsible portion of the socially responsible movement. Now, let's explain what that really means, because I think it would surprise you to know that there's really not much difference between a mainstream ESG approach and our BRI approach. Now, our industry loves acronyms. I put up on the screen some of the acronyms that we see out there: social responsible, faith-based investing, FBI, impact investing, sustainable investing, whatever it is. What I think is really interesting is if you look at the mainstream ESG or SRI mandates, they want to avoid tobacco, gambling, and pornography pretty much across the board. They also are looking to embrace that environmental focus, the governance, who is doing the right thing for their people from a corporate management perspective, and also what companies are doing a lot for their community. Now, if you look at a BRI approach, all of those things are included in a BRI approach. So when you think ESG, you're not sacrificing any of those things if you focus on just biblically responsible investing. The key differences that we see between the broad-based thing is ESG and normal SRI will embrace LGBTQ related issues. On the other side of things, BRI will eliminate abortion related products and services. That's it. Pretty much everything else overlaps between the socially responsible mainstream movement and a BRI portfolio. And I don't have time to talk about it today. And notice the key though is on the right there, embracing LGBTQ issues. That is one thing mainstream portfolios are doing, but it doesn't mean that there's just this hardline stance towards that. And we'll talk about some of those things here in just a minute when we talk about how our portfolios are constructed. Now, one thing I was really guilty of personally was I used to try to keep my faith separate from our business. And I felt it just wasn't my place to preach when people only wanted me to manage their money. Now, it wasn't like I hid my faith. Pretty much anybody who knew me knew what I believed and where I stood on things. And when I was talking to our advisors about these portfolios, I know a lot of them have felt the same way. We do have some who have been very forward in their faith, and they've been, very direct with their clients about it. But for the most part, most advisors have kind of separated faith and everything else. But what we found with surveys is there's a disconnect. When you talk to Christians, first of all, they're not even aware that this BRI movement was there, that you had options out there. I mean, look at me. Here I'm a Christian, 25 plus years in the industry. I had no idea some of these funds were even around, or that I could make a portfolio of these. So, I understand when a Christian who's just investing in an index fund has no idea they're there. But when surveys have asked Christians, would you be interested? And overwhelmingly, a number said yes, but they also said their advisors weren't talking to them about it. So we wanted to have a way to give advisors and our clients a way to invest in this thing. And first part of it is getting educated about it. Now, I think, even though the title of this SEM University mentioned the investment performance, and we've talked a little bit about it, and we're going to talk about more performance at the end, I think the key here is, this goes way beyond just performance, trying to make the most money possible. Now, we're definitely happy with the results, but I think the intangible benefit that our partners are making with these investments supersedes the actual end investment results. And I said this throughout 2020, and I'll continue to say this, is our world just needs more love. And that's the whole design of these portfolios. Now, obviously, a lot of people think when you're talking biblically responsible investing, as they focus on, this first part of Romans 12:9, which is abhor what is evil. They just say, well, I want to avoid all these bad things. But I think where they're really missing the boat is the second part of that, which is cling to what is good. Now, we all have a choice of what we're going to do with our money. And one thing that I found when I started researching this is there's a long list of corporations who donate to the Center for American Progress. And they are one of the biggest supporters of abortion lobbying efforts. And if you go through the list, you'll see the names like Vanguard, Fidelity, Bank of America, JP Morgan. In other words, most people own funds who are taking those profits and then donating money to a firm that supports abortion. Now, I know a lot of Christians vote for people specifically on whether or not they support abortion, yet those same Christians have no idea that their investment dollars are being used to help support it. Now, I don't want to get into that on this because, again, the key focus of I think Cornerstone needs to be the second part, is clinging to what is good. But I do challenge you, if you are against abortion, you need to be careful where you're investing, because money talks a lot more than who we vote for. And there's a lot of money behind supporting things that the Bible says are not good. And it's important for you to ask yourself, what should I be doing with my investments? Now, obviously, we can't avoid every business out there that is doing something that we believe personally is bad. But the point is trying to do things that make a bigger impact for our country. Now, let's talk more about what I think is the exciting part of it, which is how can we make an impact? How can we cling to what is good? Now, I had 2 college experiences. I grew up in a small town. My parents worked in a family business which serviced farmers. So I understood, how small businesses worked and things like that. And, one of the things that we talked about when I first went to college in 1992 was I was told the role of a corporation was to maximize stakeholder value. And we listed what those stakeholders were. I think every small business understands who those stakeholders are. Well, I got an accounting internship in 1993, and I decided by 1994, I just wanted to work in accounting full time. Didn't want to be in college anymore. Well, a couple of years later, I was bored to tears. Also realized I had kind of already maxed out earnings potential at a very young age. And so I decided to go back to college, this time with a finance perspective. And what surprised me was the definition of what the role of a corporation had shifted. And by the late 1990s, all of a sudden, I was told that the role of a corporation was not to maximize stakeholder value, but shareholder value. And the whole thought process that the academics had was, if you focused on shareholder value first, everything else would take care of itself. Now, personally, I believe that a lot of the problems we've seen in our economy go back to this focus on only shareholders and ignoring all the stakeholders. But that's just my opinion. What I think is important, though, and what I love about the Cornerstone Portfolios is the embrace mandate that we have as part of these, and this is a graphic by Eventide, one of our Cornerstone partners, is we now have the potential to go after companies who are focusing on stakeholders. Now, shareholders are a key group of the stakeholder group, but there's a lot of companies out there who will put employees first or their customers first. And what I think we see in the data, remember there was a slight outperformance in the BRI portfolios. I think a lot of that is companies who focus on all stakeholders are less likely to have the government come in and say, hey, look, you're doing things wrong, we're going to regulate you. They're less likely to have a lawsuit against them. They're less likely to have negative press against them. So just from a practical standpoint, embracing companies who look at all stakeholders, not just their shareholders, really is a good investment practice. Now, the other thing that I love about Cornerstone is this engagement mandate that we have. And I'll talk about how we select our investments here in just a minute, but this is super important because individually we can have a voice, but when you pool your resources with others out there whose full-time job is to make an impact, to engage in our community, you can do a lot of great things. And I've often said, it's not our government's job to mandate and protect Christian values. It's Christians' job to spread God's love and God's word. And I've always said, if we had more Christians, we'd have more Christian candidates to choose from, and we would see a Christian-led government. It's not the other way around. You can't expect the government to mandate Christian values. But what we've done with Cornerstone is we now have an opportunity to engage with companies, because remember, money talks. And this graphic up here, there's obviously companies up there that have been focus of boycotts from Christian groups. There's been a lot of bad press as far as what they're doing as far as against Christian values. And what happened was the faith-driven investor group got together and they pulled the resources of a whole bunch of faith-driven investment groups and all the resources, and they started to go to these companies and say, look, we understand, you want to support all beliefs. However, you're discriminating against Christians. You're not allowing a Christian resource group, or you're not allowing a Christian group to form to say, do a Bible study every Monday morning, or to meet for coffee, a couple times a week, just to share or have message boards or whatever it is. But through their activism, they've been able to get equal rights for Christians. So now if you work at Facebook, you have access to a Christian resource group if you're a Christian. So it's one way that the money being pulled together can impact things. We've also heard stories of two of our Cornerstone partners got together and they went after Chevron. They said at the shareholder meeting, they said to Chevron, and they said, why is it you are donating so much money to Planned Parenthood when you have all these other things happening out there? What is that? How is that a good use of your dollars? And basically got Chevron to agree to stop donating to Planned Parenthood. And, it's something that just even a boycott probably would not get done. But when you take the investment dollars and you get these experts out there to engage corporations, you see true changes actually happening out there. Now let's turn quickly to the way we've structured our Cornerstone models, because if you've known SEM even for a little bit, you'd understand we're not just going to buy and hold. That BRA Equity Core was cool in that it was able to match a secular passive investment. But pretty much right now, your only choice is to buy and hold BRI funds. I don't know anybody out there who's doing this take on biblically responsible investing. So This verse I have up on the screen, Proverbs 27:12, the prudent see danger and take refuge, but the simple keep going and pay the penalty. I think that's important. In fact, the working version when we were working on these were the 27:12 portfolios, because I think it's important. I've said all along, if we have the tools, experience, and capabilities to adjust our portfolios when there's really bad things on the horizon, we should do that. A passive strategy is not being a good steward of your money, because it's really the lazy approach. It's similar to just burying your money and then not doing anything to do it. If you have the means, you should take advantage of that and work that money, just like you should work your crops or work anything else. It takes work, and that's what we're doing with the Cornerstone portfolios. Now, they're built on the same premise as our AmeriGuard models. We want to stay invested as long as possible, and we only want to reduce equity exposure if the longer term trend shifts lower. Now, we utilize two different trend indicators to adjust this exposure. The first model shown there on the screen looks at things like the depths of the declines and the length of the decline and some of the internal characteristics. And you can see it's traded about, was that 2, 4, 6, 8 times over the last 20 years. The other model that we have has been used in real time since the late 1990s. And what you see there is, it looks at the overall breadth of the market again, but in a different way. There's a few more false signals, but you're talking 20 trades in 20 years. And I think what's importantly is the beauty of this, if you just go back to what was happening in March 2020, is these portfolios are designed to take action before you personally want to take action. And so we started hearing from people not until late March of, hey, this coronavirus thing is really, I'm really concerned. Look at what it's doing to the economy. It was so nice to be able to say, we've already taken money off the table in your investments. We also have another mechanism. If things deteriorate more, we'll take more money off the table. And, with hindsight, we know that by the end of March, the market had bottomed, even though coronavirus got much worse and the economy got significantly worse. And so that second model, that top one there, never took any more money off the table. And then by mid to late May, we were back to fully invested before us as individuals could even see the light at the end of the tunnel. And I think that's important, is to take emotions out of investing and allow the portfolios to adjust based on what's happening in the markets. And like AmeriGuard, Cornerstone is going to be a lot more than just a static allocation. And we're always looking to allocate. I put some of the technical indicators that we have up there. Don't have time to go into each of those today, but the point is, we're going to overweight and underweight different asset classes versus a passive investment. And I think that becomes critical. But I think what's more important and what makes us unique in the biblically responsible investing space is the due diligence that we perform. Is we talk to every fund provider and we do ongoing conversations with them to talk about, how do you do your avoid screen? How are you embracing and engaging companies? And most importantly, this is critical. It's the whole reason I love Cornerstone so much, is what is your vision of your company and how are you impacting everything for God's kingdom? That's really the crux of what Cornerstone is all about. And there's a whole lot of companies out there. Just because they say they're biblically responsible does not mean they're doing a very thorough job of these screens. And that's what we do as the portfolio managers inside of Cornerstone, is we focus on those who are truly making an impact for God's kingdom. Now, here's our portfolio lineup. Initially, we sought to only have models from the balance out to max risk out there, but we found that our advisors wanted to be able to do only biblically responsible investing. So we were able to add Cornerstone Bond and Cornerstone Income, following models similar to our tactical bond and our dynamic income. So the point of this slide is you can make any sort of customized portfolio to match your financial plan, your cash flow strategy, and your investment personality. Here's a different way to look at Cornerstone. The key is they will slide in and out, and you will see that the bond is never going to have stocks in it. Income will actually put a little bit of stocks based on the economic model. Balance can go from 30% invested all the way to where it is today at 70%. Growth, which we'll talk about here in a minute, is most of the time 100% invested, but if those two models kick in, it goes to 85 and then down to 70. And then we do have Cornerstone Max, which is always invested, but it will rotate around some of the biblically responsible sectors out there. Now on paper, the Cornerstone models actually have done better than our AmeriGuard models. And over shorter periods of time, you'll see, just like we saw with the BRI versus Vanguard, you're going to see periods of time where one does better than the other. Looking at 10 years, you see Cornerstone has a slight edge. And I don't like evaluation periods as short as 18 months, but in real time, we've actually seen the model results with Cornerstone slightly edging out AmeriGuard. And again, I will keep saying that if you have a focus on companies who maximize stakeholder value, you tend to do better over the long run because you're going to run into fewer problems. Now, shifting to the bond side, we see similar results. 20 years, the model results actually beat tactical bond. They do it again over 10 years. In real time, you see the same thing. But I think it's important with tactical bond and Cornerstone bond is to understand there's not a lot of faith-based high yield bond funds out there. So we have fewer selections. So you are going to see a little bit more fluctuation between these two. But the real key is we can build a faith-based portfolio across the board for anybody who is seeking to have 100% of their investments in a biblically responsible mandate. We can do that for you. Now, the only reason I focused on performance today was to help you individually overcome that mindset that Wall Street's put into our heads that you have to sacrifice performance if you want to make a difference. And our data clearly shows that's just not the case. You can actually achieve better results over the long term, I believe, if you focus on that stakeholder value versus shareholder value and doing the right thing. But what's more important, I think, is why you would choose Cornerstone is number one, the sources of profit matters. Proverbs 10 tells us the treasures gained by wickedness do not profit, but righteousness delivers from death. And so the mandates of Cornerstone: avoid what is evil, embrace what is good, and engage with those in your community. That's super important. That's what the Bible tells us to do. You look at the other thing, you should align your values with your money. And 1 Corinthians 10:31 is very clear about that. So whether you're a Christian advisor or you're a Christian investor, there shouldn't be separation between the two. You should focus on your true values in every aspect of your life. When you invest, you're an owner of the company. And we didn't get to talk a lot about that today, but even if you have a fraction of a share, you own that company. You're collecting dividends from whatever they're doing as a business. And so if you understand that, you should be looking at ways, well, how can I be a Christian owner, a Christian investor with my money? And the key thing I think is important is you can support God's work. You can leverage the time and expertise of others. I know a lot of Christians out there who will set a time to do community service or mission work a couple times a year. But the beauty of Cornerstone is all the time your money is doing that work for you. It doesn't mean you should stop doing stuff in your community, stop going on mission trips, but your money can be doing those same things all the time with a biblically responsible mandate. And finally, just being a good steward of your money, going back to Proverbs 27:12, there's 70 plus investment options out there. I don't know how you could pick. If your full-time job is not to be an investment manager, it's very difficult to pick which of those funds should I have. A lot of people pick one and they stick with it. That's not being a good steward of your money. SEM does ongoing due diligence on these investment managers, and you have daily professional monitoring, so you can go off and do whatever is important to you. So with that, my 30 minutes is almost up. I do want to spend time for questions. You can get more information. semwealth.com/cornerstone digs into a lot more of the why behind it. If you do want to ask questions, we put a graphic up there on the screen to use it in the Q&A button, and we'll go from there. So let me see what we got here. Question number one. It says, if I don't use Cornerstone but have Christian clients, can they still use Cornerstone? I think absolutely. It's, everybody gets to make a decision for themselves on what they believe, what their faith is behind. And we don't mandate that an advisor has to be a Christian if they want to use these. If they have Christian clients who want these, by all means, use them. I mean, it's something that is out there, and I think it's super important that as an advisor, you give people the things that they're asking for from that. And I've even seen advisors who aren't really convicted of the biblical mandate, who just want to do the right thing, use Cornerstone, because as I showed, it's almost all the same thing, whether you're a secular, socially responsible investor, or you're a very a biblically responsible investor. You have a lot of the same mandates. Next question is, how would I invest in these portfolios? And I think that's important. Is if you're a current client, we would have you reach out to your advisor or contact SEM and let us know that you would like to restructure your portfolio or take a look at the Cornerstone portfolios. And it's a pretty simple change to go, say if you're in AmeriGuard and you wanted to go to Cornerstone, it's very simple. We can do it within a day or two. If you're not a current client of SEM, there's contact information on our website at semwealth.com/cornerstone. You could click on there, fill out the form. We can put you in contact if there's an advisor in your area and help you figure out how you can invest in these things. Lots of easy ways to do that. Next question is, how are we able to see what's happening inside the portfolio? So obviously we're using funds because we're partnering with other people who can then go out there and take our investments and then dig into the details and engage with people and look to embrace in those things. But one of the coolest things that I think we have out there is Courtney's been writing what we call the Cornerstone Impact blog. And what that does is you're able to hear what are some of the things that are happening with the Cornerstone money inside the portfolios. And I think it's a great feature, and it's something that we'll post it on social media as well once a month, sometime around the first week of every month. And I think that's important because the why behind Cornerstone is critical. The other thing that we have, and I'm not going to trust myself to switch screens, is under semwealth.com/models, or if you just mouse over where it says models, you can see all of our different portfolios, and there's a portfolio snapshot where you can click on it and it'll show what industries you're invested in, what companies are your highest investment percentages, and then more importantly, some of the areas you might be invested in, and it will compare it to the S&P 500. So for instance, you'll see what percentage of your money is invested in, say, companies who have abortion-related products. And I think that's important. I'll do one more. If you have any other questions, get them in there quick. And although this one may not be super fast, I'll do my best. It says, what is your outlook for the rest of the year? I have my opinion, and I don't want anybody out there to think that SEM uses my opinion when we invest. We follow our models. So if you look at our models, they're fully invested. They're at maximum risk right now because all the indicators are saying, even though we've seen a few bumps in the road over the last couple months, that the trend is higher. Not to be corny, but the trend is your friend. Don't fight the Fed is another one we've heard. So that's where things are looking right now. My opinion, which is not part of this, is we are likely going to be looking at a very sharp economic slowdown sometime late fall. So we're talking November going into December, if not going into the winter and spring of 2022, simply because if you look back over the last year, 2 of those stimulus checks were already coming in by the time we get to October. And then the third, of course, and then the tax refunds and everything like that. Well, those aren't going to be there. And so the strong demand that we saw from and spending that we saw from that won't be there. The other side of things is you will see really you can only go on one extra vacation. It's not like we got suddenly 10 weeks of vacation we can go on. So yes, people are going to spend money like crazy this summer because yay, we're open. All right, let's go do things. But then that's over. Just like people could only remodel their kitchen once, or they could only go out and buy a new refrigerator once, new cars, etc. All that money that was spent will now be last year's comparison, and it's going to be very tough to match those comparisons as we get into that. So my opinion is we're due for some trouble late this year, but I'm going to let our models adjust and tell us, when they should do that. I mentioned Cornerstone Bond takes money off if the trend in high yield reverses. Cornerstone Income, if the economic environment looks to be shifting from a technical basis, not an opinion basis, we go from there. And then of course, Cornerstone overall, as well as all of our other SEM portfolios, we'll be looking at, I showed those 2 trend indicators there. The thing that bothers me, and we'll probably do a market musings video on this because now I'm up to 35 minutes and I want to get this thing over with, is I don't know how anybody out there can have a strong opinion and then base their investments on that opinion, because we've never been in an environment like this. We've never seen this much spending to fight a recession. We've never seen this much stimulus from the Federal Reserve to fight a recession, which means we've never seen that money pulled back out of the economy. We've never seen the after effect of, well, how do we pay for all that spending over the last 18 to 24 months? That's the tough question. And I would not want to base any of my investments on my opinion of something that's never happened. So we're going to do what we always do. We're going to trust the models. We're going to let the numbers speak for themselves. So whether it's the Cornerstone models and what they're picking as far as the investments we're in, or the rest of our portfolios, we're just going to let the data speak for itself. So thank you so much for joining us. I hope that answered everybody's questions. Again, semwealth.com/cornerstone for more information. There's a contact button. We definitely would love to engage with you, love to have conversations with you about ways that you can make an impact. And even if, say you have no way to access SEM, maybe you're in a 401k plan that just can't get to this, we have different things. We'd love to have a conversation with you to figure out ways that we can help you make a true impact and just make the world a better place, which is really the mission of the Cornerstone Portfolio. So thank you, and until next time.